Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, September 16th, 2019. I'll take a quick look at the broad markets, maybe touch on a few other things, crude, precious metals, treasury bonds, some of the main asset classes I've been focused on lately. All right, here's NQ. These are the NASDAQ 100 E-mini futures. I'll try to get to the QQQ charts here in a second for you ETF traders. Although the futures just again have a lot cleaner lines, better defined levels, and let me just recap what I've posted since last night. So, I usually don't post on the weekends, but last night I did think it was relevant to post that the futures had broken down. They had gapped down. Remember, futures trade virtually around the clock. They shut down a little bit each day after the market closes, and then open back up and trade throughout the night. But they do close down over the weekend. They shut down on Friday evening and then open again on Sunday evening. And so that's a gap right there. There's our weekend gap. So between Friday's close and largely a catalyst probably from the drone attack on the Saudi Arabian oil facility. You had futures went down, and so it was a textbook breakdown. Gap down, not by coincidence, right at the trend line, and then you went down from there. So you had an objective short entry last night if you weren't already short after the divergent high, or a short add-on, and then just about a perfect kiss of that 77, 75 support level. Keep in mind, these are the September futures contract that I've been highlighting right here. Now, interactive brokers with this charting platform, they haven't rolled them yet. They're still showing the Septembers as a continuous contract, and now when I reversed here, covered my shorts. I went long, and I decided to go into the December in case I hold it a little longer. Although, actually, take that all the way back. What am I talking about? I already traded that one and I'm out, but I'm back in. I'm trading the Decembers now. I'm going to get to those in a second. So I took profits on my long, and I shorted a lot there, and just shorted an additional lot right before I started the video because we're about the top of my bounce target range. So I'm going to get to the other ones in a second. Why? Because it's different levels. If you don't have any idea what I'm talking about, futures contracts, the continuous is a splice together each contract to show you, past history, because these are, the Septembers, which will stop trading soon, and people are rolling this week into the December contracts, and that's why so soon, some charting platforms I'm looking at, and you might see different prices as I'm doing this video, or the levels might not correlate, and again, that's because these are the Septembers. But this is the one I've showed you before I've been using, so we're going to just start here, and let's show you what happened. So after the breakdown, and I showed the last week I had a scenario of us, inching a little higher. We never really went much above here. I said we could push a little bit up within this wedge, but I clearly had us going down here, hitting that 75 support and bouncing from there. Why? It is a big level. It was the top of the August trading range, defined by numerous reactions there at that line. Then when we broke out, that helped to further validate it. By validate it, these are things I look for to see how significant a trend line is. The more valid it is, the more eyes are watching it, the more likely you are to get reactions. So in other words, these are just each check mark. So you have at least 3 reactions there, then 4. You had a breakout. It wasn't a reaction; it was a breakout, but it was impulsive. So that helped confirm that or validate it as a watched or an important technical level. Then you pulled back to it right there, another check mark. Pulled back again, slight overshoot, and that's fine, hardly went below it, another check mark, and then of course that's why that was a logical target. So that was a easy reversal in objective. Doesn't mean we couldn't have dropped below through it, but it just is a great place to cover a short trade and then reverse to long, and that's, you're talking probably several, at least a couple $1,000 per NQ contract so far on the bounce off that level, just since this morning. Anyways, that's where we're at now. If we zoom in a little tighter, let me show you again. These were posted on the front page. You have static chart images, but I gave you a bounce target zone between 78.58, which we've now entered, and 78.83. Why? Well, it's pretty obvious levels, as I went over before. We have a gap right here, big old gap, and that defines that. So we entered the gap. and the top of the gap comes right about in with the trend line. So we could go, if we run to the top there, 78.83, just a hair above is the uptrend line. So we, chances are we'd probably back test the trend line if we got that close. Maybe not. And that's why I say, I'll scale in. That's why I think, when you have a bounce target zone, it's good to scale in. Take a little air. If you push higher, take a little more. If your plan was to have, let's say, whatever your number is, 3 contracts, you could have done one there. If it reversed, you could have added another one. You can still add if a break of this trend line right here. So if we push higher or we break it, then this would be another objective entry, would be a break of this uptrend line right here that I just drew off the recent lows. And of course, that's plan A. That's where I think things are going. And if it's not, what you don't want to see if short is a solid recovery and 60-minute close back above the trend line right there. And then if so, you have resistance above, so you could stop out somewhere in here. Again, that would be not ideal for the bear scenario. We have a clean breakdown. Oh, and one more thing to add to that. As I say often, this is an FOMC week. We have the big rate decision on Wednesday at 2 p.m. Fed weeks, the days leading up, number one, tend to be choppy. The market usually goes into a holding period. Not always, but usually goes into a holding period, meaning it'll grind around until everybody hears what the Fed's going to do. That's why I had a couple arrows like that earlier on the scenarios. Now, the other thing is whipsaw signals, particularly on the Fed day, but even the days leading up, you have an elevated chance that you'll see whipsaw signal. What's a whipsaw signal? Well, for example, a breakdown that proves not to stick. In other words, a false breakdown or failed breakdown. I don't think that's the case. Like I said, I'm telling you how I'm trading. But that I just want to say that the odds of this trade proving to be a failed breakdown are increased simply because of the FOMC meeting later this week. So that's that. Those are your levels. Again, we're there right now. Let me show you the Decembers now that those are trading and give you comparable levels. All right, here's the December NQ contract, and you can see right here, very clean uptrend line, same uptrend line we gapped down below in the September futures that I just showed you. Breakdown, back test. This is TA 101. And I cannot guarantee this or any trade pans out, but I can tell you that it doesn't get much better than this. Breakdown, back test, both the trend line and the levels here are a little different. There's that 78.82 again. It comes in right at the bottom of the gap here, and the top of the gap is right around 79.06. You can see right there. It's not just the top of the gap, which it is there, certainly, but it's also resistance defined by reaction here, and a lot of reactions there at cap that level. So pretty big level, and again, that's why I think it's certainly an objective shorting level with a stop somewhat above. You can see the next resistance about 79.26. So you might want to have a stop somewhere in there. And if you're looking for a bigger move, stops are commensurate with your price target. If you think you're going to do something like this or even more, then you could certainly allow for a stop over this recent high or not high, but resistance level I have here about 79.80. And you can see this looks a little bit like I'm not a big fan of head and shoulders on small short-term time frames, but a lot of traders will trade them. I like to see head and shoulders patterns, or topping patterns, by the way, guys. I like to see them on daily or weekly charts, but so far that looks like a pretty clean one there, and there's the breakdown right there. Now that pattern's pretty much hit its measured target, which is the widest part of the pattern from the top of the head down to the neckline, and then you take that, add that to the neckline, and that gives you your measured target. So that's more than been met so far, but it was also the catalyst for a breakdown. And again, now, so although that was a little pattern, that target's been met, this is a bigger pattern here. This is the bigger wedge. And this says we have not met the pattern, which is the widest part of the wedge, or the measured target. That would have us coming down quite a bit lower, probably somewhere around right there, just to the measured target. So there's your trade du jour right there if you're an active trader. And if you're not, if you don't like the FOMC noise, don't like the uncertainty, don't like what just happened, the attacks in Saudi Arabia, don't know what to do, then stand aside and just watch. That's usually the best thing to do if you're uncertain. Okay, ES still, Interactive Broker's still showing the September's as a continuous. I haven't updated, so soon I'll have a chart up for the December's. You can replicate these lines on your chart. I mean, the trend lines are going to be the same trend lines. They're just going to be different price values. There's the lows right there. Very clean, well-defined trend line. Clean break, gap below. And I gave you the targets earlier today on the front page for ES. Bounce target zone about 29.98 or 29.99, however you want to round that up to about 3,600, 3,006, I should say. And again, same story. You have a gap right there, same gap that you have on NQ, or a comparable gap, I should say. And that would make logical sense for a bounce target. And then again, just above it is the trend line. So you get to the top there, you have the downtrend line or the uptrend line you may want to back test. So again, I see at this point minimal upside. At least again, an objective, can't guarantee it'll play out, but certainly an objective short entry scale in here, stop somewhat above. And if you don't want to, if you want to see additional evidence or looking for a place, maybe I'll take a partial position here. I'll add if I get the rejection off the trend line. You can also put a minor uptrend line like I showed you on NQ right there, and so that would be short entry number 1 in here somewhere, and then wait for a break of this trend line here, this uptrend line, minor trend line to give you your second short entry. And the final straw should be if you get that. Watch for rejection off there. That'll help to validate the trend line even further, especially if it's an impulsive rejection. And then a break of this morning's lows should open the door, because for a back test, that is, of the ES trading range. Remember, the NASDAQ, QQQ, and NQ have already twice now, not including the initial test I showed you, back tested this trend line. In other words, the NASDAQ 100 or NQ futures I showed you a minute ago broke out, back tested the trend line right away, which ES did not. Not the trend line, I'm sorry, the top of the August trading range, that yellow line. And so we haven't had a single back test yet in ES, and that's still my target. If that happens, you can see looking a little bear flaggish right now, right? You see the impulsive move down right there. It's a little thrust up. So if we reverse soon, boom, and that would be my target. Come in for a back test here. That, if that happens, if the S&P 500 ES SPY is going to go on, as I suspect, and at least back test the top of the August trading range, that's going to take NQ back down within the range, and it'll take out those lows today of that whatever that level was, 7226 was it? Let's look at that one more time. 77.75 on the September's, and then on the December contracts, that would be, you have to put a level right around 77.88 or so. And RTY, small caps getting a little stretched here, and you can see here on a 60-minute chart, you have a couple things going on. You have this recent wedge breakdown, just like you had in the large caps that I showed you. It'll kick back rally here. You have your previous high right here. It's not marked up here. It was before. You can see the word divergent high up there. We had a divergent high there. So same kind of thing. You had a divergent high back then, followed by a strong correction, and we had a divergent low somewhere in here. I mentioned that. Yeah, there it is. Bullish divergent low on IWM and RTY here, small cap futures. So that's what we're watching right now, and I think these guys will fall harder once we get a reversal. I was going to show you something. I don't want to get off. I have to pull another chart. It's on another monitor now. I'd have to resize it here. But what I did is I went through all the components of IWM, and I looked at the largest components by market cap, most of which were not up, or those that were not up much. And then I went all the way to the bottom, the smallest components as far as market cap goes, and those were up big at 20%. And so what I'm seeing, those are lower quality. I mean, the small caps as it is they're lower quality, smaller companies than obviously the large cap indexes. And you get to the bottom rung of the Russell 2000, those lower, they're speculative. Some of them are speculative, and at the very least, they're just not as fundamentally sound, and that's why they have a smaller market cap. And so what I'm seeing is kind of a dash for trash right now going on in the Russell. In other words, that it's not, the big names aren't leading right now at this late stage in the rally in the Russell. And if I showed you IWM, I've showed you that recently. Let's go here to IWM. Daily chart is what I want to show you. And I want to give you this board, and as I mentioned, you have the downtrend line right now and price resistance around 159.41, and so the small caps upside here appears to be limited. But again, either way, like I said, if the large caps take a dive, a significant leg lower, they're going to pull the small caps down with them. So. And if you don't want to jump the gun on it, here's an uptrend line, a price channel on IWM if you're an IWM trader. So that needs to go in that 156.50-ish support, and that should bring it back down at least here to 153.70 at minimum. I told you I'd give you QQQ for your QQQ traders. There's the uptrend lines I was focused on last week, and just like on the futures, we gap down the same chart I shared last week. So you could see right when NQ hit that support level, what was it, 775, whatever it was this morning. At the same time, well, I should say no. At the open today, at the lows today, QQQ hit the 190.128. So they come in around together. That's my point. It's support, and so there was an objective time to cover. Maybe take a quick day trade, bounce long if you're an active trader. If you're not an active trader, don't try to game these half-quarter% moves. But if you're an active trader and you're using, especially day trading, you're leveraged up, a quarter point on NQ, what is that? Probably, I don't know, $400 each, easily, maybe $350, something like that per quarter point move, and well worth it if you're trading leveraged up, whether you're using QQQ or futures or anything else. There's a back test of the trend line. That's what I wanted to point out. So the breakdown and back test, and on SPY you have same thing, even a cleaner trend line without any moves down below it other than this one. Breakdown, back test, there's the gap above. So there's a trend line if you want to trade SPY. Ideally, you want to see SPY stay below here if you are short and bearish. And if you're bullish, you want to see obviously a regaining of this trend line here, meaning prices move back above, as well as a pop above this minor downtrend line. And then you have the highs not too far above that. So those are levels to watch. But again, it was these divergences. It said, hey, when we popped to new all-time highs in SPY last week, it was likely to fail because it was a divergent high. And so we'll see what happens. And again, Fed week, so we could chop up below. It might frustrate you. It's just part of trading. You have to accept that. It's Fed week, so maybe we might see some whipsaw signals in either or both directions this week. Crude, I'll talk on crude. I had quite a couple questions at least in the trading room today. My thoughts on crude. This morning when I was working to get those charts out to you on the futures, at the same time I looked and I noticed that CL was right here. If you recall, last week in the trading room I posted a short op. It was right here, right at that tag. I had resistance at 58.79, and I said you can short there and or a break of the trend line, and that was an objective short entry on crude, and it went down. Same exact level I had. So this morning, the thing is support or resistance, I should say. That was resistance. Resistance, once broken, becomes support. So we had pulled back there. That was certainly an objective long, especially considering how much we pulled back from where futures were the night before. At the highs, that's a drop of about 7%. Yeah, it is a full 7% off the highest on CL. So at least a bounce off there was highly likely on the initial tag. That's what I say. Initial tag of support from above often produces a reaction. Now, but I said, I didn't get that out to you guys in time, and I wasn't even going to bring it up because it was hindsight, too late. But somebody asked, I said that's where I was, trying to get that fired off. But we bounced so fast, I didn't get to. So look, so it was not objective once we bounced this much. Now, the point is, it's still a level to watch. And the other thing I want to say is I don't know where crude goes from here right now. The thing about crude is the market is trying to, everybody's trying to parse all this data. What happens? How long is that Saudi facility going to be offline? Initially, last night, they were supposed to have, and I'm going from memory, just scanning the headlines, half the production back online by today. Then they dropped that to a quarter. And so there's so many variables in the oil market. So when's that facility going to come online? There's tons. I read recently Canada was sloshing. They were drowning in oil, some pipeline issue with the Canadian crude. Couldn't get it down here. So there's a lot of crude. There's crude all around the world. So basically, where's it going to pick up? Who's going to jump in and fill that void? How long is there going to be a void? I think now it also brings big, it's going to raise tensions in the Middle East. Saudis have to be pissed. How many times this is another delay of the Saudi Aramco IPO because of this problem now, and more so I think it's a bigger problem because Saudi was always perceived as being relatively protected. The U.S. has their back. We've been selling them arms and planes and everything forever, but they just got hit by a drone, which now shows their defenses are vulnerable. What they said is sure their air defenses are solid. Missile strikes, planes coming in, things like that. But as this just shows, they're vulnerable, as are maybe some other countries out there to the short range or relatively short range drone attacks. I think they said those drones can go like 700 miles or something that hit them. So now here's the point is, okay, what's going to happen now? So even they bring it back online, they're still vulnerable. I think the next thing is, and the markets are going to want to hear, I suspect there'll be buzz, is the U.S., are we going to share our new, we have that new drone technology. I remember reading an article several weeks or maybe a couple months ago where the U.S. boasted that we shot down an Iranian drone over the in the Persian Gulf with some new drone killing technology that we had. It was the first time we had tested and shot down someone else's drone. So whatever, I'm sure the Saudis are going to clamor for that. My point is, we don't know. I don't know, and the oil's going to chop around in an erratic trading range. We can certainly look at these levels, and so my response, to make a very long story short, is tactical trades. Sure, I'll take some tactical trades. I've already hit crude once today for a quick pullback short trade on a 1 minute chart. Something so fast I couldn't even get those out there. And watching the charts, see a little reaction, get a pullback. I mean, the moves are going to be quick. Swing trading wise, I don't know. I would stand aside and let the dust settle. That's my point. The market is going to have to figure out what's the near-term impact. How long is that facility going to be offline? And where's the other, how much crude is going to come from elsewhere? And then, of course, longer term repercussions of this, are these Saudi oil fields vulnerable and our other ones around the world. So anyways, I'll do some updates if I see anything compelling on crude. Here's the chart again. I just added a line there you can replicate. There's your previous highs right there. So I think today 61 looks like a ceiling probably. And we want a short pullback trade. But again, you'd have to really zoom down. This is an hourly chart, 60-minute candles. You need to, if you're going to day trade crude, you probably already know how to day trade and what charts to use. And I don't need to tell you this, but you'd also want to go down to 1, 5, 15-minute charts. Look at all those, and just try to bounce and trade. Look for 1-2% moves within, because that's the good thing about once this volatility is expanded in crude. The daily swings are going to be pretty big, and so there's money to be made very actively trading. But again, stuff that happens so fast. By the time I screenshot, a chart, mark it up, tell you my thoughts, where it might go, the move has already been made. Crude's going to move so fast. So if I see anything compelling, I'll post it in the trading room. And gold, I still, like the precious metals. I've said there's, we had the recent divergent lows, and then the thing about gold is the king of them. I told you last when I was doing the video on, I think it was on Friday, I had my limit order filled on platinum, so I was out of that. Gold and silver, I went home into the weekend with, and silver, I have raised stops last night on the pop up, real tight. Got stopped out of that. Gold's the only one I'm holding right now is on the precious metals, and I right now it's, well, I want to say hedge, but I'm going long short on the active trading account and the equities. At the moment, I'm short, and that means if I'm long gold and short the equities, that's kind of it's not a hedge trade at all, because if equities drop, gold should go up. Now, what I'm looking at on gold is Friday we had another brief pop below that 1500-ish. You know, I had the lines of 1501, 1496 right here. Let me draw that line out for you just to show you. But we had another whipsaw signal, false break, so I've added now a new line. So there was a previous line. You can see a lot of the reactions were occurring on this line here, but we had a couple whipsaws through there. One little one there, another one right there last week I pointed out, and then remember we recovered 1500, but again we popped. So really now I have a line about 1492. We have enough reactions there that this is really the new floor right now for gold. And again, it's this divergent low that says that, you know, we already had the rally. We already certainly had a nice rally off there, almost hit that 1534 target. So gold seems to be correcting more so sideways. You know, ever since putting in, we had a divergent high here, divergent high here. We had a healthy correction, one worth trading. That was pointed out at the time. But this is so far, it looks like a high-level consolidation. And I think it's probably going to break to the upside, especially if gold can work off. You got to then jump back out to the daily charts and work off those very overbought conditions that we had. Remember, this is GLD on a daily chart here. Yeah, all my trend lines have disappeared. Sometimes TC2000 will do that, and I got to restart it. So I'll just draw them out for you. But you can see here we had let's just say that should be not an arrow tool but a line tool like this. We had the big divergent high. There's an uptrend line which we're still above right now. There's that key level right there, comparable to what I showed you on GC right there on gold futures. And you know, we were extremely overbought here, a little less overbought, but that gives us a divergence. And again, bigger picture is this weekly chart here, in which again trend lines have somehow or for some reason disappeared. But we had the uptrend line right here, or the downtrend line I should say, breakout back test. Remember, we had this big triangle pattern and we had this big run up in gold. Now look, we're still overbought on the weekly. We've come off extreme overbought conditions, but we're still overbought. PPO is turning down. Hard to rule out more downside. I already went over this last week. The corrections back here were a little bit bigger, but again, they were relatively fleeting, and you had the next impulsive leg up. That's the nature of a bull market in gold. So I'm still leaning that way. To me, it's just a matter of, is there a, you know, another, we're going to break that recent trading range, drop another 3, 4, 5% or so, and I went over levels last week, or will it be it? Will we correct in more so in time, a little bit in price, and then work off the overbought conditions and head up again? Because remember, you don't have to work them off very much in a bull market to you know, start the next advance. Okay, here's silver. These are the December contracts, and so, you know, IB showing this as the continuous. I just haven't rolled the stock futures yet. There's your trend line. So, you know, mix things in here. You had this little wedge here. Again, all this stuff was covered recently. Breakout. So it's been a tradable instrument. It's hard to argue that, and it's been tradable, you know, well to the technicals. You know, so point is, you had a divergent low right here, right? That I pointed out last week, and then you got a rally out of it. Fell a little shy of these two potential targets here. We went on to break down below the downtrend line. It was impulsive. Once we broke down, impulsive, but we came up on a very nice support level. Reversed just shy of that 17,404 level, and we're moving up now, and we haven't yet back tested. So based on these divergences, I don't know if they play out. Let's just say, you know, as of last night, I'm out of silver right now. I'm only in gold at the moment, and I'm not sure if I'm going to re-engage silver right now. If so, I can tell you, if you're in it or looking for a trade on it, if the market takes a sharp leg down, it probably will rally along with gold. Gold will rally. So you have this potential bull flag here, and that could pop us back above the trend line and right up here to about that 1838 target. So there's a potential trade on silver. You have resistance just overhead too. Don't forget that, about 1806. And you need to pop that. If you pop that, probably run up here to 1831, maybe more. It's a pretty big divergent low right there. So we could certainly, those are other potential targets. Let's see what the market does. And again, same thing here, the Fed's going to come out, and they're either going to be more hawkish or more dovish than the masses are already anticipating. That's what it boils down to. And so depending on what the Fed does, that can impact the US dollar, which can impact gold and the metals. And it can also impact the flight to safety trade, risk on, risk off, depending on what they say. If they say something the stock market doesn't like, and the market takes a big leg down, that should be bullish for gold, and then silver will most likely follow gold. Or it goes the other way. They say something the stock market likes, market rallies. So again, guys, I know it's kind of wishy-washy, but that's what it is. I'm not going to tell you this is going to go one way or the other with confidence because, you know, we get the Fed coming up here. But these are levels to watch, and that's the important thing. I give you these levels and show you the developments, and then you can replicate them. And, you know, so therefore, if let's say, you know, that flag breaks out, 1806 breaks, you could take a long, trail it up, especially if that trend line's recovered. That should be pretty bullish if they solidly get back above this uptrend line here. And then finally, Treasury bonds. Treasury bonds have divergence on the RSI down here, no longer on the PPO, but there is that RSI divergence. They had a little lift last night when the futures dropped, the stock futures, that gave them a little lift. You know, the support here isn't great, but it's okay. There's some reactions there, so we also felt a support held so far. ZN actually looks a little bit better. ZN is a 10-year Treasury bond ETF. I just showed you ZB. That's the 30-year bond. That's going to track the same thing TLT, the ETF, does. Now, this will track IEF, or IEF will track this, I should say, because the ETFs buy the futures. It's not the other way around. So you can see here a downtrend line. I had one little brief spike there, yeah, and it was technically induced. We had a small divergent low at that point right there, and we popped above it, but we fell back in. So here's the downtrend line. It's pretty well defined other than that one spike, and also we hit support. So ZN, I can make a stronger case for a long on ZN here, or at least off that 128, 162 support. You can see it comes back here, and probably should add right here, there's resistance as well. So since you already hit support that long, if you didn't take it, it's been missed, or if it comes back to it again, you'd have an opportunity at 128, 162 with a stop somewhat below. But the next, actually right now, what we'd be looking for is a buy signal. I just gave you a resistance level off these reaction highs. There's a reaction low about 129 and change there. And so if we go much above there, an impulsive breakout would take us both above that price resistance and the downtrend line, and that should open the door for a move up here to at least that 130.049 level right there, possibly more. So there's another trade idea. And again, IEF is the 7 to 10 year Treasury bond ETF. All right, let's wrap it up here. I don't like the videos being this long, especially during the day, but I wanted to do comprehensive. All these things kind of tie in together, and that's why I like to look at gold, stock market, treasury bonds. Crude, by the way, somebody asked on the front page, hey, you know, the whole relationship with the stock market thing. No, that goes out the door when you have a, you know, an attack on the largest oil production facility in Saudi Arabia. That causes a spike. For that spike in oil is due to supply, sudden abrupt shift in the supply dynamics of crude oil, nothing to do with the economic outlook. Typically, crude in the stock market will move together, up, ebb and flow, up and down, based on future growth expectations, because when the economy is growing and strong, there's a higher demand for crude, and vice versa when the economy weakens. So the spike in crude today, just to be clear, in my opinion, has absolutely nothing to do with the stock market, and so that relationship you kind of put to the side, because again, it's kind of a one-off thing for supply, the supply dynamics for crude. All right, we'll wrap it up here. This has been Randy Finney with the Right Side of the Chart. Hope you enjoyed it.